Hey guys, how's everyone doing today? It's Lara Rockefeller here with Mortgages Made Easy, powered by Premier Mortgage Center. And I've been getting a lot of calls and questions from clients wondering if now is the time to lock in those variable rate mortgages. So the short answer to that, as I'm going to say, is no. And the long answer is I'll get into it now. So this is just my opinion and the opinion of many other mortgage brokers, actually. We're part of a big community of mortgage brokers and mortgage agents. And actually, we just, someone on one of our Facebook groups just did a poll of all of the mortgage agents and mortgage brokers in that group. And there is probably like 5,000 of us in that group. And of that poll, of the all the people that answered, 150 of us said that no, we would not be changing our mortgages from variable to a fixed, and that all those people that answered, actually all of us do have a variable rate mortgage. Only 2 people that responded to that poll said that they would be switching, and that they actually said they would be switching their mortgages from a fixed rate to a variable. I wanted to share my screen and just show you this little graph. One sec here, sharing. Here it is. Share. Okay. So this is a little graph that's showing in the last few years from 2012, the difference between fixed and variable. And you can see quite here, this one's fixed, the fixed rate, and this is the variable rate. So you can see the spread is quite large. And actually right now, right here, it's the largest it's ever been. It's 1%. I mean, that's a pretty big difference. What that means is that variable rates continue to be low. Let me just stop sharing there. Sorry. Variable rates are are normally much lower of a rate. Like right now, most variables are prime -1, prime -0.7, prime -0.8, which is still quite a lot lower than fixed rates for today. Besides the actual difference in the rate and how it is, a much better option, the penalty comes into play too. Now, most people don't think about breaking their mortgage and thinking about it getting a penalty, but when the reality is that 4 out of 5 Canadians break their mortgage before the term is up. What that means is they are breaking it to either move, or maybe they're refinancing, taking out some equity to purchase a second property, pay off some high interest debt. Maybe they're giving some equity to their kids to buy a house. I'm getting a lot of calls lately of people wanting to help out their children to purchase a property because it's getting harder and harder. So they're going to give them some down payment money. Maybe you're breaking the mortgage to give your kids some education money. But anyway, whatever the reason is that you're breaking that mortgage, when you do that before your term is up, you are triggering a penalty. When you have a fixed rate penalty, it is a much higher penalty, especially if you're with a bank. Banks tend to have a higher fixed rate penalty than monoline companies. Monoline just means all they do is mortgages. When you're in a variable rate mortgage, most often the penalty is only 3 months simple interest compared to a much higher compounding interest penalty. That could be the difference of paying something less than $1,000 compared to a $20,000 penalty. Yes, I have had clients have had penalties of over $20,000 if they were going to break their fixed rate mortgages. So yeah, I know there's been so much talk in the news about interest rates going up, prime's changing. I mean, as of right now, nothing has changed. Prime has not changed. The Bank of Canada makes announcements 8 times a year, whether they are going to raise prime. If they do raise prime, maybe next year, or maybe if they do that, they are only going to probably raise it by 0.25% each time, which that means if you're in a variable rate mortgage, you are still going to be getting your discount off of whatever prime is. So prime minus your discount equals your rate. So say, for instance, if you're prime -1, so your prime rate is 2.45 minus 1 equals 1.45. That's your rate. You're still going to get your -1 discount. So even if they do raise prime to, 2.75 or something, you're still going to get prime -1, which would equal 1.75, for instance, as an example, which is still a much better rate than the fixed rates that we're having right now today. Fixed rates have been going up a little bit for sure. They got really low during the pandemic, and yep, they are on the rise. However, I still think variable is the way to go. To quote Dustin Woodhouse, he was one of our great leaders in the mortgage industry, your life is variable, so your mortgage should be too, right? Because we don't know where life is going to take us. And personally, I would rather have that, I would rather pay less in interest and have the option, if I want to break my mortgage for whatever reason, I want that option to do that. So anyway, that is just my opinion. So yes, if you want to have a conversation, I would love to talk to you about one-on-one about your needs, your financial needs, what are your goals for the next couple of years. And we can figure it out, and I can run scenarios for you and break it down and show you actual math and actual numbers of why, in my opinion, it makes sense to have a variable rate mortgage. Okay, thank you so much for watching. I appreciate it. Have a great day. Bye.